Okay, let's get some perspective. Fook Hien is Senior Investment Strategist at Standard Chartered Bank, and Peter McGuire is CEO, Exim Australia. Gentlemen, good morning. Great to have both of you here. Appreciate your time, as always, on CNBC-TV18. And Peter, thanks for joining us on sort of short notice. This is, of course, all, in a way, reacting to headlines at this stage. But oil, after closing at about 87, is past 90 this morning on these reports which are coming of explosions in central Iran, etc. There is, of course, an immediate reaction because that region produces a fair bit of oil, and then slowly the market will start to look at specifics. What is the exact quantum of oil which perhaps goes out of the market if this flares up into a wider regional war? How long before where we are now and, the next, we get to sort of a reasoned kind of assessment? And what's your own sense? Is this going to lead to a big flare-up in oil prices?
I think a couple of things. First off, any market that jumps like oil 3.5%, 4% in a matter of hours really demonstrates the fragility of the market, and that I suppose the premium that is quickly built in from geopolitical. And when you've got a number of explosions, as you've just highlighted, across numerous countries, this is the sort of tension that really creates much upside unknowns in the sense of price and where that can take us. So look, it's too hard to really, we've just got to give it a couple of hours to get a real read of it, but it's incredibly volatile. That's been washed across gold as well. And you've seen, the issues, I think, are going to be an ongoing saga. Looks like it, and it's building to that, what we've seen as far as Israel and, of course, with Iran.
But Peter, in the past episodes of, geopolitical tensions, whether it's the 1990 Gulf War or as early as the Russia-Ukraine war, we've seen crude prices spike by more than 50%. That's the kind of shock we've seen on the back of the supply disruption. While it is too early to say, but do you think that we could be headed there? Is there a probability that this could be one such instance?
Well, I'll take it that I'm going to answer that, Reema. Yes, I do believe that that can happen. We know as well as anything that, you see these unknowns enter markets. I can remember back in '86 when they bombed the flagship in the Strait of Hormuz. I think it was the Bridgeton. These sort of shocks really impact markets, and it impacts it very, very quickly, as you've demonstrated, 50% up. Now, we don't know how much, I suppose, collateral is going to wash over the market. You're going to see choke points as far as the Strait of Hormuz. What happens with around the Bab el-Mandab, that Gulf of Fears leading into the Red Sea? Does this really disrupt shipping? What happens as far as airlines? All of these factors really wash across the market, and that creates the geopolitical concerns and then the supply disruptions that naturally, if you've got ongoing sagas and then you've got attacks, then that can really ramp up prices quickly. And I think we've just got to wait and see how it all rolls. But it's certainly not a good sign in April, considering it could be a very, very delicate summer.
Got that, Peter. So we'll have to wait for a couple of hours and then see the kind of reaction we get on crude. Let's get in Fook as well into the conversation. Hi, Fook. Good morning, and thanks so much for joining in. Well, in the past, you've mentioned that you're fairly optimistic on India's prospects, but valuations were a concern. Now we're seeing a bit of a pullback, and maybe we could see a couple of percentage points more pullback on the Indian indices. Will it be a good time to get in? And does India continue to remain one of your top markets?
Indeed, it is. We do see India as a buying opportunity right now. We have a view now to buy India large caps. The pullback has presented an attractive opportunity in our view. We're going to be watching. Globally, I think we're watching the geopolitics, and as you say, historically, it tends to be short-lived. And of course, if there's a protracted impact on the oil price, I think that is when it will channel into impact on the wider economy and global assets. But in terms of India, of course, as well, is watching the oil price because it's a net importer of oil. It's very important to them. But we do see the elections proceeding as expected. There's going to be continuity in the government. Growth remains very strong. We think that is attractive. So we do have a buy view now for India large caps. We think it is an attractive opportunity.
Fook, you want to name a couple of these names that you're looking at? Because you've mentioned that, yes, large caps is what you like from India. A few names that you're looking at?
No, I wouldn't be able to mention single stocks, actually, if you understand, just for regulatory perspective. Yeah, but we do like the large caps. And I said we do like some of the sectors that are like industrials, consumer discretionary. But at the same time, we would balance it with a bit of barbell approach, liking healthcare as well.
Fook, in the past, most geopolitical episodes have been buying opportunities, right? When does it not become one? How do you understand if the correction that we see today and which ensues in the next few days is a buying opportunity or not?
Yeah, I think we're dealing with what is going to evolve and how it's going to be evolved. I think the Iran attack was very, very, very well telegraphed. Everyone expected that. But of course, how Israel responds now remains to be seen, and how that escalates remains to be seen. But as you said, in the past, we do think that the psyche of investors makes it almost impossible to time the bottom, right? So what we would say is that if you want to look at a diversified foundation portfolio, for equities and bonds, if that comes down, it is an opportunity to add, because staying invested is going to be a very important thing, and that's going to be helping you to grow wealth over time. I mean, in terms of timing the bottom, this is going to be very, very difficult for us to add any value there.
Peter, where do you see, I mean, you've done this long enough and you've seen various conflicts, etc. It's an election year in the US as well, right? And US consumers don't want to pay higher prices. Although one can argue and say that US is self-sufficient now. They're not importing anything. I mean, they're net exporters, I think. Correct me if I'm wrong. But
yes, I mean, they're...
Yeah,
Sorry.
Go on. How does all of that sort of play in with how the US is going to intervene, if at all?
Well, Prashant, I mean, we've got to look at the Biden administration and how they structure their rhetoric around this. So I don't think that they're by what we've heard over the last couple of weeks, so I think they're sitting pat on this. There's no, they haven't offered anything as far as assistance to Israel or I think it'd be more to the point of sanctions, depending upon if this really starts to flare up across the whole Middle East region. We don't know from a contagion standpoint, and you could have Saudi involved as well. So it's just there's many moving parts to this. And as you're seeing the market's up now, it's reading something into it. I mean, the market's up 4.15% on Brent. That's explosive. Any move that's like that, 4.2% from WTI. So everyone's long. They're all realizing that's the first part. The second part is how the market appreciates this sort of. Is it going to wash out quickly? Is it going to, give back all of those gains? Or is this going to be, an ongoing over the next couple of days as far as trading and what happens tonight in New York? So, the unknowns associated with this, there is certainly much concern from a trading perspective. And if you're looking from America, as you're saying, it's a huge generator of oil. And at these sort of prices, I'm sure that the wildcatters and all of the guys, from Baker Hughes, they'd be starting to look at, a time to, if they're not in the market, they'll certainly look at re-entering the market because the prices are just so strong for production.
Peter, a quick word on gold and dollar index. These are the king assets in times of uncertainty.
Absolutely, Reema. I mean, gold's sitting at all-time high. It's probably 24.30, 24.35 at the moment. It's incredibly strong. Silver's up as well. All the base metals are up, and gold and oil, dollar index sitting at around about 106.30. I think there's probably more upside for dollar index in the short run. That'll be a flight to safety in some ways. I think the currencies will be a little bit further crushed to the downside: euro, yen, pound, and Aussie dollar, and associated currencies. But stronger US dollar, stronger gold, and by the looks of it, stronger oil in the short run.
And between the two precious metals, gold and silver, what would the preference be at current levels?
I think, Nigel, I'm more bullish for silver. I think there's more upside for that because you've been under investment for the best part of a decade or 2 decades. So the huge demand. I think silver's got, as I mentioned, incredible upside, but you can't discount gold. I mean, have a look at what, China, India, and Turkey are the 3 hottest central banks buying gold. Their purchases are just off the charts, and I don't think that appetite's going to wane anytime soon from central banks, buying gold, and they're storing it like there's no tomorrow.
Gentlemen, thank you very much for joining us early this morning and taking us through these tenuous times.